Hello, everybody, and a very warm welcome to the first ever episode of The Working Trader. I'm so excited to be starting this. I'm currently on my lunch break at work, and that's actually the premise of this channel. I love the financial markets, I'm fascinated by economics, and I really, really enjoy trading. But I've got a full-time job, so I can't really afford to let the two interfere with each other. So this channel is going to be about how I've gone about finding that balance, how I do my research, how I do due diligence, but also do it all sort of outside working hours, and then how I go about sort of setting up my trades and that kind of thing. We're also going to have general market discussions, sort of things that I've found out, things that I'm interested in the markets, potentially some trades that I like the look of, and we'd obviously love to hear your thoughts in the comments as well. And in the future, we'll be having some live videos. So, to start off with, before we do any of that, any of the market discussion, any of the trading stuff, I think it's really important that people understand the underlying markets and the underlying market instruments that they're trading with. Because to be able to properly understand and manage your trades and manage your risk, you need to understand what it is you're trading. So the first few episodes of The Working Trader are going to be a real back to basics look at sort of financial terminology, financial instruments, and financial markets. So without further ado, we're actually going to jump straight into it on this episode to what are stocks and shares. So stocks and shares, probably the thing I think that most people get into when they first start trading. They're probably the easiest to understand. And there's a lot of publicity about them. You hear a lot about the stock market, whether it's the Nasdaq, the S&P 500 in America, or the FTSE in England, the DAX in Germany, whatever it might be. They're in the news a lot. You hear a lot about it. So I think they're interesting to trade. They're probably one of the easier instruments to understand, but you still need to know about it and to know what they are. So what are stocks and shares? Well, they're what's known as equity. They are the ownership of the company. So as a shareholder, as a stockholder, you own a part of that company and you share in the profits and if the price goes down, the losses of that company. Um, the definition of equity is basically the assets minus the liabilities. So if you liquidated a company, you sold off all the assets and paid off all the liabilities to the bondholders and whatever else, the equity is what's left. So, if something did go wrong for a company and they went bankrupt or whatever, as a stockholder, you are kind of at the back of the line. So that's a bit of a risk when it comes to trading with stocks and shares. As for the actual terminology of stocks and shares, the words are often used interchangeably, and especially in American English, that's true. Um, However, in other countries, there's sort of a bit more of a definition around it. Sometimes even there's legal difference in the terminology. But generally speaking, the difference is semantics. So you can own shares of a company's stock, but you wouldn't really say you own stock in a company's shares. It's more like the shares are the individual denominations of the ownership in a company's stock. So that yeah, that's kind of the difference between the words. It's basically a semantic one, but overall, stocks, shares, and equity, it just refers to the ownership of a company. And there's, of course, private equity, and you can own shares in private companies as well. But for the sake of this video, we're just looking at public. We'll do a future video on private equity as well. So, what are the risks and rewards of trading stocks and shares? Well, unlike a bank account or bonds, especially if it's like a stable bond from a stable country or company, you can lose all of your initial capital. You're not guaranteed anything back. So you have to diversify because a company you could lose everything. So that's obviously a big risk. You don't want to put all your eggs in one basket, so to speak. Stocks are also pretty volatile when you compare them with other investments. If you compare it to something like real estate or bonds, again, especially if they're fairly stable government bonds, the swings up and down in stocks and shares is a lot bigger than in those other markets. So that's something to consider when trading if you've got that kind of risk appetite to see your profit and loss swing from high to low in sometimes quite large percentages. But your reward of taking on that extra risk is that there's theoretically unlimited upside. Now, of course, no stock's ever gone to infinity, but a lot of them have gone up sort of 100x, 1000x, 10,000x, hundreds of thousands of x sort of percentage gains over the years. So, if you do your research and you pick the right stocks, hopefully you can be profitable over the long term. So guys, that's our kind of back to basics on stocks and shares. We want these back to basic videos to be fairly snappy. So that's it for the stocks and shares one. Let us know what you think in the comments and join us for our next videos when we'll be looking at bonds. Thank you very much. Bye.